Hello and welcome to Simply inTAXicating. The 36th GST Council was held and through video conference. And it had basically one agenda item, and that was to reduce tax rate on e-vehicle, which has been reduced from 12% to 5%. Of course, the parts also, it has been reduced on parts as well, battery, etc., all those items. Apart from that, of course, certain states did protest in advance, even before the meeting took place. They had their own reasons. They also talked about implication on revenue, etc. Those are the aspects we will talk about later. But apart from that, the revenue continues to be a serious concern for both the center and the states. Of late, the graph of fake invoices, IGST refund related fraud, etc., it has been rising, it has been soaring in a big way. And that's a major area of concern for the revenue planners, for the Ministry of Finance, for the state finance ministers who have been talking about it. A few measures have already been initiated by the CBIC and of course the states, and a few are in the pipeline. We have 4 domain experts who will take a look at the various measures already taken, a few measures which are on the cards, and its implication, how this is going to impact honest taxpayers, or is it going to perhaps enhance the compliance costs for good taxpayers who are already complying with the various procedures, etc. And compliance cost, of course, has been a major area of concern under GST. So we have Mr S K Rahman, Commissioner CBIC. We have Mr Shailendra Kumar, the former chairman CBEC. We have Mr Prateek Jain, the tax head, Indirect Taxes, PwC, and of course we have Mr Bimal, the chairman, Indirect Tax Committee, PhD Chamber. So let me start with Mr. Rahman. So please tell us, briefly what happened in this GST Council meeting, the 36th meeting.
Yeah, in the 36th GST Council meeting, the major decisions taken are 2. One is about electrical vehicle. As you are aware, present non-electrical vehicles, the rate is 28%. Compared to that, for electrical vehicle, existing rate is 12%. The government has decided to reduce the rate from 12% to directly to 5%. This is basically done to encourage the usage of electrical vehicles, thereby a reduction in the pollution and the congestion that is happening. Apart from that, even on the electrical charger that is required for charging of these vehicles, presently in the automobile parts, it is the present tax rate is around 18 to 28%. In comparison to that, the government has decided to reduce the tax rate on the charger for electrical vehicles directly to 5%. Presently it is 18% to 5% it has done. Third decision with respect connected to this is taken is that the hiring of electrical buses has been completely exempted. Earlier also it was done for the Road Transport Corporation, even for the educational institutions for transport of students and teachers, even for supply of vehicles for the transportation is also already exempted. For the local governments, in case electrical buses are hired, that is also exempted.
So I mean, going by the number of decisions, of course, every citizen of this country will welcome it, because the basic goal is to reduce pollution, and but sir, what implication it will have on other areas, and from your perspective, sir, this is welcome decision. Yeah. Of course, in the budget itself, in fact, another additional benefit was of 1.5 lakh was given to those who are going to purchase electrical vehicles. So right. Government is giving a big push to this.
No, there's no doubt that introduction of e-vehicles and over a period of time phasing out complete phasing out is not possible, as we all know. Correct. The data in other countries. But gradually, at least in the big cities, if it can be reduced, it will have a telling impact on the environmental pollution, particularly in these cities like Delhi, Mumbai, Kolkata. But as you rightly said, there are certain implications which I wonder, because we don't get the details from whatever have been released up till now, whether the implication is quite grave in case of the automobile industry. As a matter of fact, automobile industry has not been doing well for the past few months. They were asking for some relief and all. So now obviously there will be big boost to the e-vehicles. So automatically demand will go for that, and then the demand for the automobile will come down drastically. And then there will be a question of their employment. because as I just understood while discussing with you before the session started, that actually these will be a completely new setup. So it is not that the engineers and workers there straight away can be put into this job. So whether any thought process has gone into it, because it will have a telling impact on the unemployment. Already we are having, so whether we should have done it so hurriedly, or we would have given some more time, that is the thing which has to be seen.
So let me go to Prateek. Prateek, in fact, I mean, you must be aware that lots of reports coming out nowadays that most of the automobile companies are laying off, the workers, and particularly the contract workers and the daily wages kind of workers. Suddenly they are on the street now because only out of the week in a week 4 days or 5 days the factory is working and a kind of holiday being given to them, but no money being given to them. I mean, it's becoming a serious issue on the job side. Of course, I mean, the initiative is good, but the way we are going ahead at the cost of conventional automobile sector, there are huge amount of investments have already gone into. And so, how do you look at the whole issue?
So I think, the government policy of encouraging electric vehicles, I think, cannot be questioned, because I think the world over that's a trend. Of course, in other countries also the percentage of e-vehicles is lower, but clearly we want to increase, and therefore the whole ecosystem has to be looked at. As you mentioned about the budget, 1.5 lakh of additional income tax benefit, the basic custom duties were reduced on parts of EVs, etc. So I think from a policy standpoint, you can't question. Of course, you have to see that the transition period which has been given is adequate, so that industry can move. I do hope, and I don't understand this sector that well, is that large part of the employees who are working in the conventional auto sector can move to this as well. I would just want to highlight one or two points. One is that it needs to be ensured that it does not lead to inverted duty structure, because when you have 5% on EVs, and of course few of the parts we have reduced, like batteries, etc. But if you look at other things, and classic examples, railways, right? On railways there is a 5% rate on wagons, etc., and it's leading to a huge inverted duty structure issue, and there the refund is also not allowed. So that has to be looked at. Of course, there is a revenue implication of this, and we were all hoping that 12 and 18% will combine and become 15, 16% as the revenue stabilizes. So this will have a significant revenue implication as we go on, because as more conventional vehicles move to e-vehicles, there will be a shortfall in revenue collection, and government would hope that increase in demand would offset to a large extent this. But if that doesn't happen, then we are not looking at further rate rationalization for next 1 or 2 years. So that, I think, is important for us to understand.
So what he suggested that, of course, I mean, automobile industry, they have been representing to the government that the 28% slab, at least it should be reduced, etc., because there is a recession in the automobile sector now. And it will, of course, still have a revenue implication for the states as well, because the petroleum is outside the GST. Naturally, it's not going to be covered by the compensation, the clause. So, what implication do you see for the whole thing from that perspective?
See, from the government side, whatever decision they have taken, it is a good decision, because we have to move from pollution to non-pollution. We have to see the green revolution in the country as well. And we have to lead by example. We are emerging country, as we are talking about. Now, having said that, what is the parameter we could have seen? That automobile sector, conventional automobile sector, they are demanding for a long time for their survival. They have invested their money, they are running their show, not able to sustain because of GST rate and other factor. What they could have done, they could have made some transition plan, that okay, we are moving to e-vehicle, but at the same time we got a lot of infrastructure investment already placed in the conventional automobile sector. They need to be looked into properly, so that transition happening for both the sector coming together, and their transition from conventional to e-automation or e-vehicle, which we are talking about. There's the first factor. Second factor I want to touch on, inverted duty structure. We are only look at inverted duty structure from the input versus output. There are many other industry, I'm telling you, that input services are being procured at 18% GST rate, 12% GST rate, and your output is only 5%, and they are having accumulation. Not only one sector, I can list down number of sector where inverted duty structure on account of input services. Why can't we look at such factor as well? Railway, he has picked up correctly. There are so many other industry I've seen personally that input services amount around 30% of their manufacturing cost. If they have to pay 18% and discharge 5%, continue with the accumulation, and there's no refund of inverted duty structure.
Right.
Coming to the third component, whenever government is looking for such sector to be promoted, like they are talking about e-vehicles should be promoted. Let it be promoted, but you should make roadmap for the conventional automobile sector, how they will transition, not only from manufacturing perspective, but from employment, but from infrastructure investment, but from the technology change happening from conventional to e-vehicle. I have not seen such kind of preparation as yet. We are looking only GST rate and thinking moving that conventional to e-vehicle. Maybe we require a little more preparation. See that this existing sector also transition to e-vehicle as well.
Okay.
One more point,
Sir,
if I may.
sir.
See, another indirect effect, which I don't know whether the revenue has taken care of, is that your consumption of diesel and petroleum will come down heavily,
Correct.
which means your revenue on your big chunk, like the states, I think have 50 to 55% of the state VAT.
Yes.
So this will bring down the thing. Your revenue there will be a tremendous shortfall. Whether this has been taken into consideration, this is just as a former
Right.
revenue officer, I'm just
Okay,
just
sir.
thinking.
I would like to add
can-
just one more thing.
Okay.
Petroleum, diesel, why only we are looking from automobile perspective? Petroleum and diesel is in need of any manufacturing sector and service sector.
That's
If petroleum, diesel kept out of GST, then this is creating cascading
No, I'm
overload.
not talking of keeping GST.
I'm just
It's
creating a
true.
point. I'm just
Yeah.
saying, I'm putting up my point to the government that this particular petroleum and diesel is an important issue. And industry is demanding for a long time. Why can't it be included in GST to done away with the cascading of taxes?
And also,
Can-
if environmental concern is what is driving it, then also there is a case for reduction of GST rate on hybrid vehicles, which is still
Right.
28%, which needs to be looked at.
Can-
Now the question is that all the government can do this, can reduce tax rates for automobile and all those concerns, for instance, inverted duty structure or the refund part. It will happen, sir, only when the government is comfortable with the
Revenue.
current state of revenue. Which is a major area of concern. I think that's the reason that it has been denied. You know, a lot of block credit, if you look at section 60, suppose we find that the revenue is a concern. Unfortunately, sir, the revenue has gone below this 1 lakh crore. And what is more unfortunate is that of late, we are able to read a lot of frauds about fake invoices, IGST, refund fraud, etc. So let me go to Mr. Rahman
Before
and
that,
find out
can I
what-
react on few of the points that are expressed by
Okay,
this
you can,
panelist?
sure.
Just on this point. First one is about, all of you have said about employment, because conventional industry, internal combustion industry has a
Getting
lot of
adversely
employment on
impacted,
that.
yes.
So here one point what I have read about in the reports of Niti Aayog is that the 40% of electrical vehicle cost comes from the battery, and this battery is lithium ion battery is going to be manufactured in India. So there is going to be a huge industry development for domestic manufacture of lithium ion battery. So probably some of the employment opportunities could be looked into that. And on the position of this transition period that is to be given, both of you also mentioned for the conventional vehicle to the electrical vehicle. What I came to know is that present focus is going to be on the public transport, two-wheeler and three-wheeler, not on the cars that are possessed, which will come in a phased manner. Electrical vehicle means our thought process immediately goes to the cars. I mean, the focus is going to be on the two-wheelers, on the three-wheelers, as well as public transport. As on date, what I read is that if you see, only 5% of the population actually travels by their own cars. 95% of the population do not travel by their own cars. And also the present ownership is around 20 cars per 1,000 people. So the focus is going to be more upon the two-wheeler, three-wheeler and the public transport, thereby the transition happens smoothly. Second points on the transition is that it's not that the conventional industry is going to put off and suddenly electrical vehicles are going to start. The conventional vehicles also will be encouraged because right now they are on Bharat 4 specification. India is talking now of directly Bharat 6 specification. So when they encourage the conventional industry also come up with the Bharat 6 specification, so to large extent they will be taking care of the environmental concerns. And coming to your issue of the railway, that blocked credit, you said saying the reduction of electrical charges to 5% and the vehicles to 5%. You said there could be cases of inverted duty structure. Yes, possibly they could be, but the example that you have quoted of railways is basically because the credit is blocked there.
Blocked.
Because they have blocked credit, so that difficulty is there. But other concerns of, to a large extent, the government will ensure saying that, final product is, higher than the raw material. But wherever there are cases of inevitable cases of inverted duty structure, we have always given that process of refund on account of inverted duty structure. But government will ensure and keep your point in mind that such kind of aberrations do not happen. And the last one about the petroleum and diesel, sir, you mentioned that consumption of petroleum diesel also will come down. Yes, there is bound to come down, but otherwise also, if you remember, 3 years period was given for bringing the petroleum and other products into GST network. Yes. So probably by 2022, things will change a lot. So in fact, the tax structures, the kind of inputs that will be coming for various industries would be changed a lot. I am very sure a balance will be taken by the government accommodating the then situation that's going to happen in 2022 and 2023.
Can I just add 1 minute?
Yeah,
just
sure,
1 minute.
sure.
Sir, whatever you have said, what we want to present from industry side, okay, 5% rate on electric vehicle. Look at the inward supply as well. Inward supply contains like battery, you said 40%. There are a lot of input services coming at 18% GST rate. Then what happened? That gets accumulated and there's no refund of that accumulated credit. So that is going to be pricing part of me. So we have to look at the industry as a whole, not only input, we have to see the input services as well. Yeah. And lot many other industries are struggling. They are getting accumulation day after day and not being able to utilize that money. That gets blocked as a working capital. Maybe we have to look at that part as well. Then only the ultimate benefit of reducing prices, make it affordable, demand will grow up, that will come up.
Right. We take a note of that and I'll submit it. Yes. We'll ensure that these concerns are carried forward to the government.
So all these concerns will be addressed only when he is comfortable.
So my job is at least to take note of the concerns expressed by you to ensure saying that they are put to the appropriate authority.
So how exactly the CBIC is dealing with this unprecedented? I mean, did the policymakers initially really think in terms of this kind of quantum of fraud going on in the economy, or there is nothing new about it? Because it's a transition from central excise or service tax to GST. So a lot of yields, or maybe those the seeds of those yields being actually is a part of the transition. So that is why it is happening or something. So how do you look at this and what CBIC is doing?
Yeah, if you give me 2 minutes. The fundamental issue of GST is the supply chain mechanism, where the input tax credit is passed on smoothly from one supplier to other supplier. Keeping that in tune, the government has been very liberal. If you see in section 16 and section 17, we said saying that let the ITC supply continue. But I am very sure, I mean, probably in 2017 we did not imagine what could be the shape of this fake invoices that would have come. Even government is taken to some extent surprised. In fact, we have trusted the industry. We had a lot of confidence on the industry that probably industry will take advantage of this. In fact, as you are aware, the approximately less than 1 lakh crores of revenue that we get is only 15% of total tax liability. You are aware that 85% of the tax liability is discharged through the ITC. We were thinking that probably it will go well. But once we have realized, once our enforcement wings have started booking cases, especially on the wrong availment of ITC as well as fake invoices, government started taking few steps. If you can summarize into 1 or 2 points, I will tell. One was that recent step that is taken is section 25. Section 25 subsection 6 already says that PAN is required for registration. Today the registration process has become too simple. You just have to go to GST and register. It's a 3 days process. Right. So there should have been a proper verification. Now we have said saying that Aadhaar is also mandatory apart from section 25. Section 25 is proposed to be mandated. It has become already finance bill. It has been proposed. It has become finance act. And the way central government has passed in the manner after all the state governments passing, it may become as amendment to the CGST Act. We are also insisting upon our officers, at least for some of the taxpayers, to go for Rule 25. Rule 25, you know very well, it takes for physical verification of the registrations. So in the present setup also, what we said is Aadhaar is mandatory for the old registrations, you have to declare. For the new registration, anyway, is going to be mandatory. For the old registration, some of them will have to verify and see whether it is, units are existing or not. And we have also taken in this reference, I would like to draw, if you remember Central Excise, 28th February 2015, there was a circular completely insisting upon physical verification during the process of registration. That's one step. Second step is, obviously you are aware and you have heard of, that is the new return system. In the new return system, what we are saying is that the supplier will upload his invoice, the recipient will look for it and be satisfied, all the conditions of section 16 are satisfied, then he logs it, then only the credit is taken at the time of filing of return. So keeping this in view, we thought probably to some extent there could be less of fake invoices. Also to some extent there would be less of the missing invoices. As you are saying that today, even if supplier does not upload his invoice, supplier does not even pay taxes, supplier may file GST R1 or not, supplier may pay tax in GST R3 or not, the recipient is able to take the credit. So this percentage of invoices, we wanted to reduce it through the new section 43A. If we read subsection 4, we have mentioned it has been approved as a part of the law amendment that has effective date is yet to be declared, but otherwise it has become part of the Amendment Act. Therein we have said saying that maximum of 20% of the missing invoices only the recipient taxpayer would be able to take credit even if the supplier does not do. It said maximum. So through rules we would like to gradually reduce that 20% to 10 to 0. So we are looking out for a phase where probably there would be less of the missing invoices. If you have seen in the new return pattern, we have offered three things. One is the normal return, other is the Sugam return, other is the Sahaj return. Sahaj return is basically for B2C where you are having only the thing, whereas Sugam return is for B2B and B2C. Their missing invoices cannot be taken credit. The proportion, the facility of taking credit by the recipient, even if the supplier does not upload, is only given for the regular return. Third one, you might have already heard of that customs, especially keeping in view the IGST refunds. There is a huge increase in the IGST refund. In fact, I read your article that has come in Tax India. Right. You seem to be having very good statistics, and you have mentioned about how much increase is there in IGST refunds. There we have come out with the latest circular called Customs Circular 16/2019 on 16th July 2019, wherein we have suggested 4 steps. First is we said saying that suspicious cases will be detected, local alerts may be fed, and examination may be intensified, and wherever there is possible, suspension of IGST to be done. Apart from that, we have also, if you remember, we have also taken some measures and also given facilities to the officers to keep the registration in suspension. You heard of that? Yes. Initially it was direct cancellation. Now we said if you are in doubtful, you can keep it under suspension. 2, we have also taken power to block the credit. In case you are aware that this facility, the advisory has been given by the officer, but it will be done only from the date policy decisions and the policy circulars will be given, in which there is a facility for an officer to block the credit in case if it is found saying that there is something wrong that is going on.
But that will require change in law, right, sir?
We have not yet given any legal basis to it. We have only electronically given the facility for the cases where that has been booked by DGGA and all those extreme cases. In case they have expected unwarranted withdrawal or utilization of the ITC credit, at that time extreme situation to be used, the electronically, technologically facility is there, but the legal portion, I mean the circulars and all those, a call will have to be taken.
The only point here is that, from an industry standpoint, we need to be slightly cautious in this. It should not become a tool for an officer saying that, I'll block your credit at a drop. I mean, it has to be then all the precautions have to be properly articulated in the circular.
And then more so the assessment will start, audit will start, and this circular will become omnipresent everywhere.
Absolutely.
So that is where probably the
central government has not yet utilized it, but that is one kind of, why I mentioned is to have a deterrent effect, at least saying that people should know saying that at any time, and otherwise a view is taken that electronic ledger is completely under control of the taxpayer and government cannot touch it. But please remember that in case unwarranted emergency situation where something is required, so government would be able to interfere with your ITC ledger. And, ineligible credit also, when you have taken, obviously it has to be reversed with the interest. As you are saying in the new scheme also, if supplier does not pay, even if it's assuming saying that a genuine recipient is there, a genuine recipient pays towards the value of supply along with the GST, even then he is at risk. He has to pursue with the supplier. The government also runs behind the supplier. It will not touch about the recipient. But the problem is that unless the supplier files the return, pays the tax, the recipient will be at risk. He has to reverse the credit that he has taken as outward liability with interest. So it is in the interest of the recipient to always ensure saying that KYC is done when he takes the supplies from the supplier. and he should continue to follow up with the supplier that he files his GSTR1 and he files his GSTR3B and the pays tax. Otherwise, even though the government is not running behind the recipient, even though we are going for the supplier for non-payment of tax, non-filing of returns, but the interest portion that he has to reverse the credit with interest obviously weighs. The government would not like to get into this to some extent, wherein the bondage should be from the supplier to the recipient, and both will have a checks and balances to ensure that it is done. Overall of this, even if nothing happens, sir, our section 66 is already there, which we are yet to roll out. In case there is any doubt about over-utilization of the ITC, we can always order for the section 66 audit.
So what more can be done here, sir? You know, again, I mean, from the, when you have handled so many preventive
the first point is that with which you started, that first year there have been so many frauds and government was sleeping, sort of thing. Actually, you see, at that time, if you recall, the entire emphasis is on making GST acceptable to the people. So if you start implementation of GST along with rates and surcharges and all, then people will get very, and you know, but it's very difficult to keep it within some bounds. So it was, I think, more or less expected that there will be some frauds in the first year, but from the second year onwards, you start apply your all this. I think to that extent, what we hear from Mr. Rahman now, and we have been seeing also, that cases are being made. And another point that comes out of Mr. Rahman's statements is that the systemic changes, a systemic detection of evasion, they are trying different methods for doing it, and taking care of Prateek's point that the entire trade should not be hit by that, and all those things do not come into picture. So, but then you see, I would say that systemic thing can't take care of everything in any country. Right. There will be some lapses. So for that, your DGI, Director General of GST Intelligence, and your anti-evasion wings in the commissioners have to be strengthened. Again and again in this forum itself, I have mentioned that the work of officers in assessment has come down heavily. So the entire work will have to be diverted to this anti-evasion and audit. And audit are also very intelligent auditing, not like anything. Already some things are being laid down in that context. So we can see that broadly speaking, government is going in the right way, but then on anti-evasion they have to do more. And some of the ways, your articles, 2 articles, you have written the ways and means of doing it. I think government should consider this so that there's strict enforcement. I think the whole motto should be genuine taxpayers you facilitate, and the offenders which are, I mean, from my, just as a thumbs rule, we can say that actual delinquents are not more than 6 to 7%. Absolutely. The rest are all good. But then because of this 6-7%, the genuine trade suffers. And every evasion that takes place in a particular commodity, if I am evading the tax, he is a regular, paying taxes, he is suffering. Yes, so they should also, there's a responsibility in the trade and industry also to come forward and point out that who are doing the mischiefs.
I just want to add one. So I think, see, my personal view is this issue of fake invoices has been blown out of proportion. I think this fake invoice was a problem earlier also. It was that maybe earlier it was not detected. Now it is being detected because, you have all the data. So it's not a problem which has started now. So there are 2 cases where tax is not being paid. One is organized fake invoicing. Okay, the people are creating different companies, etc. I think that there are very few players who are doing it. Okay, and the government is right. I mean, every day there are raids and arrests are happening on that. So, and that is being taken care of. And the new return system is coming, and the e-invoicing is going to come slowly. So that is one part. The second, I think that is an aspect where it has not been perhaps thought through at this point in time, is what do you do where as business as usual tax is not paid. Right. So you go and buy a furniture, you go and buy a garment, etc. In a B2C segment where there is no incentive for a consumer to ask the person to give you the invoice, and that I think constitutes a larger chunk of this. And there I think there are countries who are trying to look at consumer incentivization. You incentivize the consumer to ask for the bill, maybe upload on the app, maybe do something so that that tax is not being paid. There are countries who have converted your invoice to lotteries and all of that. that segment has to be looked at. Because in a B2B segment, other than the organized fraud that we're talking about, there may not be too much of evasion.
So there was, in fact, one very important point we talked about, that the government, right from beginning in GST, is allowing industry and trade to take advantage of liberally the ITC benefits. But don't you think that the industry has taken this particular motive of the government, or rather too liberally, that recently the minister in the parliament said that the overall GST fraud, it goes up to almost 47,000 crore, which is more than the NPAs with the RBI data. If I look at the last
40,000 crore.
40,000 crore. So, I mean, how do you look at this particular aspect, and what should be done so that the genuine taxpayers are not hurt?
Let me answer it in a blanket way. As a trade, industry and commerce, we are for honest taxpayers. We want honesty to sustain, and they should be rewarded. Just try to introspect this fake invoices, how it has been arisen in GST regime. We started with GSTR 1, 2 and 3. Had it been there, they could have solved this fake invoices issues, because 2 and 3 is being done away with, all right? So this has cropped up as one of the criteria. Those fake invoice raiser has taken this route. Otherwise, with automation, you could have catch hold of them, right? Why 2 and 3 could not in place? Was trade responsible for that? Was government responsible for that? We need to look at the preparation. Whenever we start with something, we have to see why it has arisen. 50,000 crore we are talking about, and we are talking about we have to done away with a fake invoice. Of course, I'm saying for it, but we have to see our infrastructure is ready. Now you talked about new return system. Supplier uploading the invoice, recipient will be given credit. But then you're talking about block credit, 28, you're talking about that 20% only the provisional credit can be taken. Now I'm referring
Missing invoice.
Missing invoices. Now what I'm referring here, even for the new written system which is yet to be placed, we have to really see the success of new written system as well, because we started with GSTR 1, 2 and 3. We need to have proper roadmap and hand-holding to the trade, industry and commerce that this new written system work out, reward to an honest taxpayer. Coming to the third point which I'm referring to, there are certain GST provision which need to be looked into. Like one provision, section 16, which you referred under section 2, subsection clause C. What it says, I'm a recipient, I paid taxes to the supplier, supplier does not deposit, recipient would be denied the credit. You have given registration to both supplier and recipient. Recipient has paid the amount to the supplier. It's a supplier who faulted with, he's not depositing. Give me the list of such supplier who after collecting, not depositing. We have to take exemplary step to demonstrate to the trade that those who are evading taxes, they will not be left out. They will be taken on firm hand. When we are giving such example, I'm a being honest recipient, I paid the taxes to the supplier known to the department, and my credit is being denied. And it is being taken a pretext, no, being recipient, you take all precaution. I've taken all precaution, it's supplier who faulted them.
Right.
Just one
Sure,
last point. So we have to take the right steps in a right perspective. Now, we started with the fake invoices. I draw your attention on GSTR 1, 2 and 3, which could not take in place, and this thing has arisen. Now new written system which we are referring to, and then we have the exemplary. There's a provision called non-bailable offences. Right. 5 crore rupees. There are 4 non-bailable offences. You issue invoice without supply of goods or services. You supply goods and services without issue of invoice. You take a wrong credit or utilize wrong credit, or you don't pay the taxes within the 3 months defined time period. Over and above 5 crore. Why can't we list down such tax evader on public domain, that these are the tax evader, over and above 5 crore. They are under imprisonment for so and so region. At the same time, we have to take action against such, even we have to see both sides, taxpayer and tax department. We have to honestly look after the activity that this money of government should not go away. If it is taxpayer, we will take firm steps against the taxpayer, be it with the tax department as well. Those are the measures will create some kind of platform as a way forward. I'm not saying 100%, but as a way forward to get the revenue for the government of India.
Perfect. So,
Can I react?
More than the reaction, I request you that what are the other measures which are in the pipeline?
Yeah.
That is more interesting. So we have analyzed the issue,
I know.
of course. Everybody is with you.
I know.
That you deal with these evaders with firm hand. He's saying that. Chamber is saying
But
that.
we are
Correct.
saying
Future
that
steps.
taste of the pudding is in tasting it.
Yeah, absolutely. So let's hear from
I'll-
what is there in the store
Pipeline.
from
Yes.
policy side.
Yes. Very much. Now you have touched a very important aspect. Like you also mentioned B2C transactions. You also said there is a possibility of in evasion there.
Correct.
We agree that B2C there is scope for evasion because as a customer you may not insist for a tax paid invoice. So we are trying to come out with something wherein the customer's interest would also be taken, some credit points kind of thing, which you could utilize at some other places. We have taken note of that. In fact, we are working out separate system for B2B to B2C. But today present discussion is mainly about the credit. Fake invoices means actually invoice you have generated where the tax has not been paid. So that where the credit is wrongly being taken, on that we are focusing. To that extent, B2C also will be taken care. But in pipeline you have mentioned, that's why I said B2C, we are thinking of some particular measures to be taken. Now coming to the organized, when he has also mentioned saying that there could be very few people who have organized this, and a lot of modus operandi are being busted now. A lot of things are coming out to the press and other places. You are able to see that how organizedly people are running this fake invoices system. Now in the pipeline, what you have mentioned before that, I would like to react on that GSTR 2 and 3. GSTR 2 and 3 had been put up only for the trade facilitation measure. Otherwise, the backbone of GST is that to verify that the supplier's invoices auto verified by the recipient. But for the trade facility, in fact, we had in earlier days of annexed verification central excise also, we kept all that away. We brought in 3B to supplement to, and this has been basically we have come out of that requirement of 2 and 3 only for the trade. Now we wanted to bring the new measures in pipeline is the new tax return system, wherein we are hoping that probably this kind of auto verification to some extent it will satisfy. But at the same time, what you have mentioned that in talk of 16(2)(c), you said saying that there could be honest recipient who could not, who should not be suffering for the sake of the supplier. I agree with you. When there can be two kinds of recipient who could be honest recipient, there could be a involved recipient also.
The recipient arranging the transaction.
Very well aware that these
Yes,
things is
that
coming
scenario is there,
with or
yes.
without. So the law has to be common for both of them, and that is why we have brought in what is called e-invoice. Now the next step in line for this is that government has already made an announcement. Our Honorable Union Finance Minister in her budget speech also she has mentioned that we have proposed to bring out what is called e-invoice. E-invoice intention is to ensure saying that there is no other invoice in the market other than what is generated on the portal. So this invoice, there is no need of verification, and directly, in fact, one of the facilities is that it will, your return is auto-populated. Your outward supplies are recognized by the system. Your inward supplies are also recognized. So the return for you, outward return for you and inward return for him are auto-populated. And the government want to implement it in a very phased manner. We have already made some announcement in this regard. Press release is also given, in which we said saying that probably by January 2020, we will be doing at a voluntary basis. Whoever is willing to come will come. Then actually phase 2 will be doing it for the taxpayers who are above 50 crore turnover. Probably phase 3 will do for the B2G, business to government supply. Like that in slow phased manner we would like to implement. Like you also mentioned saying that when you are bringing out the new return system, the problems of the concerns of the trade as well as the concerns of the fake invoices should be addressed. So we would like to invite you, your comments have been being from PhD chambers, from the consultant point of view, that what steps we should take to ensure saying that the bad face of these fake invoices, like you mentioned, unholy hole in the treasury, that holes are plugged, and what measures to be taken. The government will be looking forward to the chambers to suggest some measures which are not very painful to the trade, at the same time protect the interest of the revenue. So with those we'll keep in mind, we'll ensure saying that the packages that are going to be unrolled henceforth will be taken care of, not only trade facilitation, to some extent enforcement also. After all, government has to balance enforcement and facilitation, and we will surely make some steps where you will not find, meaning there could be some things called refund scrutiny, especially pre-audit could be there, post-audit could be there. In fact, there are enough provisions in the Act itself, which actually we have not done that, assessment of non-filers, we have not done that, verification of premises, asking for, let's say, non-filer thing. If you do not file, automatically a notice will get generated to you.
Right.
That is called GSTR 3A. All these are there. Enough provisions are in that. Probably one by one we will start taking it out and getting it activated.
Now it's high time.
It's
High time that
Yes,
we
yes, correct.
unfold the firm steps, like our Honorable Minister of State for Finance in his GST Day speech has very categorically said. In our press release also we said, saying that now the 2019-20 is going to be a little bit of measures would be taking to ensure that.
Absolutely, it's wonderful. So all of us are with you on this note. Let me thank all my guests, and I rightly say that it is high time for the high tide fake invoices, which are in the market circulating in a big way, and the quantum is rising. But of course, as Mr. Rahman rightly said, that there are several provisions in law itself, several administrative measures which could be taken to deal with this kind of tax evasions. But at the same time, adequate precaution and measures should be taken so that minimum pain is caused to the genuine taxpayers, the honest taxpayers. But some of the suggestions, of course, B2C, etc. That is one point where the department will have to come up in a big way how to deal with this, because at the C point, in fact, quite a few instances that some of the items which are exempted. Recently, I came across where the food items, the juices, etc., where the hoteliers, they are charging 18% GST, etc. So they are collecting. God knows where they are depositing or not. They must be depositing also, but the taxpayers are little wary about it if they start paying this kind of thing on items where the GST Council has already exempted them. So I mean, a lot of B2C side, the tax evasion, the awareness part, of course, that will take a few more years. But of course, a few measures are in the pipeline, a few measures have already been initiated, and GST side, it's a high time that the tax evaders are dealt with, because they are earning bad name for the industry and trade, and who are paying taxes honestly, and they are ensuring the health of the exchequer. So that is where perhaps the CBIC and the council will take adequate precautions in future, whatever measures are taken. But all of us are on the same page that a few more measures are required to deal with them. Thanking you all